It's like for about 2 more minutes, and then we're gonna join. We're gonna start. Okay, guys. Welcome to today's class. So we're gonna cover MAC today. I was under the impression FAC was tomorrow, but then I found out that MAC is tomorrow. So we're gonna do the MAC paper from now until 12. We will take a break halfway. Okay. So this session will end at 10 o'clock, and then we will join in with a new one. I'll tell you what time. We can take a slight break or so forth. So we're going to work through the MAC question paper as far as possible. I'm going to go through, I will go through the costing section first, and then I'll also want to provide you with some high-level overview as we go through the question. And then also, because I know costing tends to be the killer out of the two. So I think one of the important aspects is to know what is being asked, which topic within costing is being tested, and then how to make how to use what you have learned to apply it to a complex question. Just one more thing. So I'm trying out a few new apps that is automatically linked with Zoom. So one of it is read.ai. So what that thing does, it's AI. We all know what AI is. So it will automatically record this video. Record the session, take some notes and all of those type of stuff. So I'm testing it out. So I want to see what it produces after this meeting. So take note, it's there. Okay. You just need to know that it's there. Because obviously for privacy and all of those type of stuff to comply with that. So yeah, just be aware of that. So now I'm going to switch over I'm going to switch over into the question. We're going to read through it, and then we're going to tackle it as we go along. Okay. Um, So we can go through question 1 of MAC3761 exam. So this is October, November 2022 exam. I'm going to read through the scenario. As we go through the question, I'll highlight some important points in what you need to think about. So what you want to, it's you obviously can't train like this. If you haven't trained before like this, it's not going to work for tomorrow, because it takes some time to train your mind to develop a way of thinking, right? But still, I'm going to show you how to think, and then hopefully for tomorrow you can use some of it. It won't work perfectly tomorrow, but at least it will help to identify what you are reading, which topic you are busy with, and what to force your brain to think about. The whole point, what you're trying to get to over time, is to read in such a way, because the whole idea is that you are training your brain to do something. So you want to train yourself how to read a question paper, so that by the time you come to your final exam or you come to your test and so forth, your brain is already trained. So as you are reading, it, if I can put it this way, automatically picks up the relevant information. So so you can do it tomorrow, but what's going to be the difference of tomorrow is, if you haven't been doing it before, you're going to be actively doing it, so it's going to tire you out. Whereas when you train to do this over time, over your study months, then when the time will come for tests and exams, because you have trained your brain to do it, your subconscious do it automatically. So when your subconscious work, you're not using so much energy. But when your conscious mind is working, that's when you get tired out, because now your conscious mind uses a lot of energy, and basically that's what's happening. That's why you get tired. So we're going to take you through how to think through so you can apply it tomorrow. But remember, ultimately you want to get to a point where you automatically picking up the necessary information as you read through a scenario. So it starts off by saying, Stellenbosch family owns a 25-hectare piece of prime land that is considered suitable for agricultural and residential purposes. Okay, so important to take note over here that it's suitable for two types of things. Okay, that for agricultural as well as residential. Okay. Currently, only 2 of these 25 hectares are in use, and primarily for residential dwelling. SF has now decided to make productive use of the land and will soon establish a wine and juice making group comprising of 2 major operating companies. Okay, so take note. They have a 25-piece hectare that is suitable for land, for residential and agricultural. They already have used 2 of the 25. So that means they have 23 hectares available. Okay, so take note of that. And what they're intending to use it for agricultural, I'm assuming, because they are saying over here, to establish a wine and juice making group comprising of 2 major operating companies. Okay, so take note of that. So if you can see they're saying 2 major operating companies, so it would probably be, if I can put it this way, SF Group, and then below SF Group would be wine division and juice division. Okay, so that's what I am seeing, the way they're wording it at this point in time. SF has also consulted with McKinsey Business Consultants, a leading business consulting firm, to assist with its business case. Companies within the SF group will adopt the absorption costing method and the first in, first out inventory valuation method. Okay, so absorption costing method, when you read that, what must come to your mind is what the cost of a product is. Okay, so the whole point of absorption costing method versus variable costing method is what makes up the cost of a product. Okay, so very important, the word cost of a product. Okay, so what is included, what makes up the cost of a product? So for absorption costing method, it would be direct material, direct labor, variable manufacturing overheads, and fixed manufacturing overheads. If that was the variable costing method, then it would have been direct material, direct labor, and variable manufacturing overheads only. Okay, so take note. So when you read absorption costing method, let your brain tell you what is included. It doesn't give you the amount. It just tell you what items are included. So absorption costing method, 4 things: direct material, direct labor, variable manufacturing overheads, and fixed manufacturing overheads. That must run through your mind so that you are aware of it. Okay, now let's move on. So the extract from the business case for SF Winery. Okay, so this is an extract of the business case. So I'm assuming this is what probably McKinsey helped work on. So one of the group companies to be performed is SF Winery, whose operation will consist of a vineyard where white grapes will be produced, wine cellars, and juice tanks wherein the white grapes will be processed and subsequently fermented to produce semi-sweet white wine and white grape juice. Okay, so take note. One group in the companies, one operating company is going to be SF Winery, which will have a vineyard, cellars, and juice tanks. Okay, so they're going to have 3 items: cellars, juice tanks, and a vineyard. And what's going to happen is that they're going to produce 2 products: SWW, semi-sweet white wine, and then white grape juice. Okay, so take note of that. They're going to produce 2 items. And then maybe we must most likely keep this in mind: the juice tanks wherein white grapes will be processed and subsequently fermented to produce those 2 products. In each financial year, SF Winery will have one harvest period with an expected average yield of 600 tons of white grapes. Among others, the costs relating to the process of wine and juice making include soil preparation, seeds costs, seed planting costs, irrigation costs, pest control costs, farm labor costs, harvesting costs, and quality inspection costs. Okay, so in that sentence, we have that there's one harvest period per financial year and an expected yield of 600 tons is provided. Okay, and then they're telling us the different types of costs that is being incurred. After at quality inspection, I'm assuming that is error over here, it's either after or at, one of the 2. So after or at quality inspection, the grading process, after the harvest, grapes are separated into 3 grades. Okay, so so once you do the quality inspection, the grapes are separated into 3 parts: A grade, B grade, and C grade. We must just make sure it adds up to 100%. So there we can see A grade is 80, B grade is 16, and C grade is 4%. So effectively at this point, you can write down A grade, B grade, C grade, 4%, 80%, 16%, 4%. Okay, then you can work out the expected tons, because we know a total harvest of white grapes is 600 tons. So then you can say 600, 80 times 600, 16 times 600, 4 times 600. You can get an expected yield for the different grades of white grapes as well. That's what you're going to process basically through your mind, or you write it down. The reason being is, as we read on, that kind of information can help us formulate what is actually going on in the question. So if I just stop at this point quickly and I share Excel with you. So if I share Excel, so total yield is 600. Okay, and then we expect A grade, B grade, and C grade. Okay, we expect 80%, 16%, and then I think, if I remember, 4%. And this is going to be that multiplied by 600. Don't take too much time on this, but you want to just process these type of stuff. You want to process as you are reading. So it provides you with some context of what is actually going on. Okay, so then it provides you some context of what is actually going on. Okay, so that is what we will that is basically what we will do. Remember, at this point it says we'll have harvest period. So just take note of that. 80% of the harvest is all of the harvest. So this is 600 tons is what will be harvested. Okay, so let's move on. So they say only A-grade grapes will be fermented to produce the semi-sweet white wine. Okay, so why that's important? We have 600 tons, but if only A grade will be used to be fermented for semi-sweet wine, that means the limitation on the amount of wine that we can make is limited to 480 tons of grapes, okay? Because we won't be using the other two. So that you must process through your head that there is a limit on the amount of wine that we can make. I'm not saying that it's going to cause a limit, but we can only make wine up until 480 tons of grapes have been used. Okay, then they say, what did they just say? Okay, during the fermentation process, a small quantity of A-grade grapes will result in waste. Okay, so we'll have to have a look at that. This waste has no sales value and will be discarded at a cost of 15 Rand per kilogram. Okay, so there's a few things to take note now. The grapes are provided in tons, okay, but the costs are given. The cost for this is given in kilograms. So I always suggest whichever unit level the cost is provided, change everything to meet the cost amount. So because cost is in kilogram, change tons to kilogram. Don't keep tons as tons and then change the cost to tons. Rather keep the cost as is and then change the other item to match the units of the cost. Okay, so it's much cleaner that way. So so remember, only A grade will be used for semi-sweet wine, which is equivalent to 480 tons. But they're saying of that 480 tons, a small quantity of those grapes will result in waste. We don't know how much yet. They'll probably tell us. We will see. And the cost is the cost of discarding that wasted item is 15 Rand per kilogram. Okay, so they say thereafter, wine will be stored in barrels to mature and will only be bottled just before sale. The expected selling price to wine retailers is 65 Rand per bottle. B-grade grapes will be processed further to make grape juice, and cellulose and other organic compounds are added to the grape juice to give it a rich and natural taste. Grape juice will be sold to local retailers at 30 Rand per litre. The annual production is expected to match the annual demand at 304,000 litres of semi-sweet wine and 152 litres of white grape juice. Grade C will be sold to pig farmers at 450 per kilogram. Okay, so at this point, if we must just stop over there, what kind of process does this look like to you? Sarika, Serena, what kind of process does that look like to you?
To me, it looks like joint costing process.
Okay, and what tells you that?
The different products that was made. So the grade A, the wine and the juice, and then it also has the byproduct.
Okay, correct. And then also, so that's correct. And also, what's very important is that it went through there was one process that
Oh yeah.
was done, and 3 products are coming out. So what was the one process? It is the growing of the grapes. Okay, and then when that harvesting process is done, there are 3 types of grapes that comes out, which is A grade, B grade, and C grade, and then from there they produce different products. Okay, so then you have sweet wine. I mean, you have wine, you have juice, and you have stuff to the farmers, right? So when we have joint products, so we have joint when dealing with joint costing, we'll end up with joint products and byproducts. What to you can put it in the chat, or you can say what to you is the joint product and why, and what to you is the byproduct and why, if any. Or you can put it in the chat, or you can just tell me.
Hi, can you hear me?
Yes.
Okay. So for me, the wine from the process, the grade A wine, was a product, and then the juice was also a product, but the grade C grapes that were sold to farmers are the byproduct.
And why is
Which
that? Why do you say those 2 are joint and others are by, and others by? I'm not saying you're wrong. I just want to know your reasoning.
okay, that's okay. Um, because the first 2 were further processed, so they have further processing costs and they have a higher selling price. And then the one that was sold to the farmers were had a smaller sales value.
Yeah. Okay, so that is how you identify joint and byproduct. The joint products will be basically the high value items. The byproduct will be the item that is insignificant in sales value relative to the other items. So you can see 65, 30 Rand, they'll focus on those. And the other thing is 450 Rand, 4.50 Rand. Okay. What's important to take note over here is you don't look at it at sales per item. You must look at it total volume. Okay, so you can see 80% is going to wine, 16% is going to juice, and you multiply it by the sales values, and it'll be big numbers. Where only 4% is going to the farmers, and it's only 4.50. So they know, just by the way. So that is considered to be your byproduct. Remember what's important with this: when we have a joint product, when we have joint costing, we want to work out the cost of the joint process. Okay, so that means up until quality inspection, just up until the split-off point. So when did the split-off point happen? After quality inspection or at quality inspection, right? So that means all costs from the start of the process up until quality inspection, including quality inspection, that is considered your joint costs, because that is the joint process. Only after that point does grapes get split and gets used for its various products. Okay, so up until the split off point, very important in a joint process to identify where is the split off point. So the split off point is after they do the quality inspection. So all costs from the beginning up until quality inspection. So if I show you the cost here, where was that? So all the costs over here up until that point would be cost in the joint process, so that would be joint costs. So once we have that joint cost, the total joint cost, we will have to allocate it. Now, what's important to understand, the joint costs must be allocated to the joint products only and not to the byproduct. So before you do the allocation of the joint costs to the joint products, you must first reduce the joint costs by the net selling price of the byproduct. Okay, so that's important to take note. So as you can see, we're making 4.50. So the joint cost will be reduced by that 4.50 per kg. And the net joint cost will then be allocated to the joint products. Okay, so that must go through your mind already. The only thing that is, that I don't see at this point in time, I don't know if we're supposed to know it, but I'm not sure how we will convert tons into liters. And I think there is 1,000 kilograms per ton. I think it's like that. So hopefully they'll tell us somewhere in the question, unless they, I don't know, I didn't go through all the details in MAC3760 in the MAC3761 course to see whether you are required to know the conversion. But I'm hoping that it is not, that they'll give it to us. But I think 1 ton is equal to 1,000 kilograms. So therefore, we'd be able to take the 600 and multiply it by 1,000 to get it into kilograms. The only thing I'm not certain about at this point in time is the conversion of kilograms to liters. Okay, so hopefully it's 1 for 1, but we will see. If you don't know, then make an assumption. Okay, so hopefully they'll give it to us somewhere, but if you don't know, make an assumption, make it clear, highlight it so they can see that what you are assuming. Write it a bit bigger, write it over like 2 lines, and then highlight it so they can see that you weren't sure what the conversion is, but this is what you are assuming. Okay, so you're not going to get all the marks, but you'll definitely not get 0. So always, if you not certain, then make an assumption. Okay, so I just want to go to the required, because the required dealt with the first part. Okay, so so here they are saying, with reference to the information under extract from the business case for SF Winery, draft a memorandum to the management of SF wherein you recommend and motivate for the most appropriate costing system that SF Winery should use for the allocation of production costs of SWW and GJ. Calculations are not required and other costing systems are not considered appropriate, should not be addressed. Your motivation using information provided must incorporate. Okay, they're not highlighting that must for nothing, okay? A discussion of points from the information that support your recommendation, an outline of the cost accounting treatment for the different products outlined in the extraction of the business case winery, an outline of the cost accounting treatment, okay, identification of possible methods for allocating costs, okay, and reference to supporting figures from the information where necessary. Motivation 10 marks, recommendation 1 mark, and layout 2 marks. Okay, so let's have a look. Okay, so so this here is, I just want to see quickly something. It's question 1, MAC3761. Okay. Okay. So we must write a memorandum. Okay, so when you write a memorandum, it is to, from, date, subject. Okay, you get this from the required. Okay, so who are we writing to? We're writing to management of SF. Who's it coming from? You just see what we with reference information as memorandum. Okay, we don't know who we are, so you make up something. So management of SF. Who's it from? You can say whoever you are. And the date, whatever the date is on that date, but for today it is, or you must look what's relative to the question. You don't just write that date. But there's no specific question date over here. So the date for us today is 5 February 2022, and then the subject is, what are we supposed to say? Drop a memorandum wherein you recommend and motivate for the most appropriate costing system. Okay. Okay, so it is a recommendation and motivation for the most appropriate costing system okay, for the allocation of production cost of SW, and there we go. Okay, so you kind of just take what they said and you plug it in. You just make sure that when you read it, it makes sense. Okay, so now we're going to answer. Okay, so you remember, never put your own name, you're going to get 0. You're going to put your own name in there, you're going to get 0. So make up a name, A student, A consultant, be lenient, whatever you want to call it. Okay, I could never write, so I used to put myself as be lenient. I couldn't discuss things. I'm a little bit better now, but after being in school. Okay, so now let's so let's basically have a look what they want again. So we must recommend and motivate for the most appropriate costing system for the allocation of production costs of SW and so they want a discussion of points from the information that support your recommendation and outline of the accounting costing treatment. Okay, so let's have a look. Okay, so we can basically say, based on the process that is followed to produce it is to follow to produce SWW and GJ A grade grapes are graded after the quality inspection process. Okay. This process indicates that a joint process is followed up to the inspection process. Okay, so you're just telling them that what you can see from the process that they are okay. I want to use okay, yeah, so this is because let's get that costing over here. So you want to just indicate some information from how do you know it's a joint process, because there are similar costs incurred up to the inspection process. Where did we see that? So a lot of it is coming from here. What is the processes? So we'll find one harvest period with an expected, okay. This is because these costs are incurred for both products in the harvest process. I think they called it a harvest process. We can just put the can just put that over there. Okay, so there we have it. So what we are telling them that we can identify that it is a joint process. Okay, so as a result, these costs are known as joint costs from a management consultant point of view. Okay, so joint costs will be reduced by the net sales from the C grade grapes. Okay, the net joint cost will then be allocated between SWW and GJ. There are at least 4 methods to allocate net joint costs. The following are appropriate for this process. Okay, so the following of the 4 are appropriate for this process. Okay, so what did we tell them at this point? Okay, so let's go back to the required. The required, where's the required now? So the required, let's say with reference to the information, so required say a discussion of the points from the information that support your recommendation. Okay, so we supported our recommendation. We're saying that it is a joint process, and therefore joint costing must be applied. Okay, how do we identify that? We said that they are going through a similar process, and only at a certain point, when they are at the inspection point, which we call the split-off point, is when the grapes are being graded and different products are being produced. Okay, then they are telling us outline the accounting treatment. So we said as a joint process, therefore joint costing applies. The outline of the accounting treatment is as follows: that you take the joint costs and you allocate it between the joint products, which is SW and GJ. Okay. However, the joint cost that gets allocated is not the total joint cost. It is the net joint cost that gets allocated. What is the net joint cost? It is the joint cost minus the net sales from the grade C grapes. Okay. The next is then to identify the identification of possible methods. So we are telling them there are 4 possible methods. Okay, so there are 4 possible methods, but not all 4 is appropriate for our scenario. So what are the 4 methods? Okay, now remember, these methods only apply to the joint products, not to the it doesn't apply to the byproduct. Okay, so when you look at the methods, you're looking at in relation to the joint products. Okay, so why I'm telling you this, because the joint products are in liters, but the byproduct is in kilograms. So that may throw someone off. So always remember, when you're looking for the allocation methods, you're always looking at in relation to the you're looking at in relation to the joint products. So what are the four methods? Okay, so the four methods is in no particular order, but I'm just going to call it 1, 2, 3, 4. Okay, so number one is physical measures. Okay, so physical unit measurement, something like that. Okay, so what is that saying? That you can allocate your product based on the measurement unit, and you can only use it if the measurements are the same. So for example, both wine and juice are in liters, so therefore you can allocate based on liters. Okay, so that's important to take note. So it's so although the grapes is in tons, it doesn't matter. The fact that the units of the final product is the same, we can use physical measurement method. Okay, so both juice and wine is in liters, so we can allocate based on the physical measurement unit, whatever it's called. Okay, so what some people would have thought that you can't use because the byproduct is in kilograms. So remember, always look it in relation to the joint products. Okay, the second method is market value at split off point. Okay, so what is market value at split off point? You can only use market value at split off point if there is a selling price at split off point for both products. Okay, so if you can sell the juice and the wine at split off point, that is why it's important to know when split off point is, then you can use. Okay, I know juice is, there's no split off point, and I think wine as well, because after it gets graded, it needs to be stored, right? So you can't sell it at that point in time. So therefore, at split off point, we only have grapes. Okay, so at split off point, we only have grapes. We don't have a complete product, and as a result, we cannot use the. I just need to confirm. I just need to go back to read up that again. But if I remember now from what I read, at split off point is when the grapes get graded. Then they need to go into the various processes in order to become wine and juice. So at split off point, we only have grapes. We don't have a completed product. So as a result, there is no market value at split off point because we don't have wine, we don't have juice. Okay, so we can't use that method. The third method, which is the most common. So number one, physical measures, very common. And number three is also very common. It is known as the net realizable value method. Okay. The net realizable value method. What is this method? It is when you do further processing, okay, and then there is a selling price after further processing. So we have split off point, then we have further processing, and we have a selling price after further processing. Now, why is it called net realizable value? The key thing to identify is that you must always remember this. You are trying to split the joint cost. When does the joint cost end? The joint cost end at the split off point. So you want to split the joint cost to the various products, to the various joint products at split off point. Okay, so why do we call it net realizable value? Because what is happening, let's just see if I can do the following. I'm going to just stop sharing this quickly. Do you see a whiteboard? See a whiteboard? Thumbs up, yes, no?
Yes, we are.
Okay. So what's important to take note is the following. Excuse my drawing skills. So here we have, this is the starting point. Okay, so this is the starting point, and this here is the split off point. Okay, so there we have item 1, item 2, item 3. Okay, then I'm going to just draw a dotted line. Okay, and this here is basically further processing. Okay, so this here is further processing cost. Okay, so everything over here is our joint costs. So this here is the joint process from start point to end point to split off point is our joint process. So every cost incurred at in this section over here is our joint costs. What we are trying to do, we are trying to allocate our joint costs at split off point. Okay, so we're trying to allocate our joint costs to our joint products at split off point. So here we have, this here is item 1. This is the wine, that is the juice, and this is to the farmers. Okay. So at this point, we have juice, which is in liters. We have wine, which is in liters. So therefore, we can allocate at this point in time. So we're happy with that. I mean, we can evens because at split off point, we know it's 80% grapes, 16% grapes. So therefore, it's in tons. So we can also allocate based on tons. And because the ultimate item is in liters, so it doesn't matter. Okay. So we are able to split the joint costs at this point using physical measurement unit. Okay, so that's number 1. We can definitely use that method. For number 2, we spoke about market value at split off point. So you only have a market value at split off point if you are able to sell the item at split off point. We know we can't sell the wine nor the juice at split off point. Why? Because it is still grapes. Okay, so that method is not applicable. Number 3, which is the most common one, is the net realizable value method. That is saying we have a selling price at this point. Okay, so we have a selling price at this point after further processing costs. So we know that at this point, juice is sold for 30 Rand and wine is sold for 65 Rand. Okay, but the important aspect over here, we do not want to split based on this selling price because we need an amount at this point in time. So the net realizable value is basically a theoretical market value at split off point. All it is doing, it is saying, take this selling price, which is 65 Rand for wine and 30 Rand for juice, subtract the further processing costs, and that will theoretically give you a market value at split off point. So remember, the method 2 is the actual market value at split off point, meaning you can actually sell it in the market. Method 3, which is the net realizable value, is in inverted commas. I'm using inverted commas because just to bring your attention that it is a theoretical market value at split off point. How do we get that? The actual selling price after further processing minus further processing costs, which will give you a theoretical price at this point in time. Okay, so we can definitely use that method because we know the selling price. They never gave us the further processing costs, but we know there are further processing costs, so we can get that method over there. The 4th method, which is a little bit challenging, hardly comes through, but I think it's a little bit difficult and a little bit confusing, is the constant gross profit margin method. So the constant gross profit margin method is basically ensuring that for each product, your gross profit is fixed. So for example, let's say they have a 60% gross profit margin for wine and a 50% for juice. Okay, so we know that the wine is 65 Rand, So if we apply 65 Rand times 60%, I'm just going to make up stuff, okay? So I'm going to, do you see Excel now? Do you see Excel? Or do you still see the whiteboard?
No, we still see the whiteboard.
Okay, let me just stop the whiteboard quickly. How do I stop this now? Okay. Close whiteboard. Okay, so for the constant gross profit margin, we are saying the following. Let's say for SWW and GJ, we will say selling price 65 Rand. This one was 30 Rand. And I'm making up a gross profit margin. Okay, so I'm making up a gross profit percentage. So let's just say this was 70% and this is 60%. Okay, so that means the margin, the gross profit is equal to that times that. Okay. So now we can work out what the total cost. Total cost must be, so the total cost is equal to 65 minus gross profit, which is 19 Rand 50. Okay, so now I know what the total cost must be. So then they will give you various costs. Okay, so they'll give you various costs. So for example, what could the various costs would be is further processing costs. It could be a packaging cost. Okay, and then the last cost would be joint costs. So what would happen is the following. They will give you further processing. They just say 10 Rand. They just say 9 Rand. Packaging costs, they just say 5 Rand. They just say 3 Rand. Okay. So cost before joint costs. The cost before joint costs, we will say equal the sum okay, so let's just make this 2 Rand. Okay, so that means what is available to allocate is total costs minus the other direct costs. So you can only, other total joint costs, you can only allocate 4.50 Rand, and you can only allocate 1 Rand. All we'll have to have a look at over here is, does this add up to the total joint costs? Okay, so they'll work it out that it works out, but basically that's what we are trying to do. So constant gross profit margin is to ensure that the margins remain the same and the leftovers. So when you work, so now we know total cost has to be that. In order to generate a margin of 70% on a price of 65 Rand, the total cost have to be 19 Rand 50. It can't be more. Can be less, but not more. Same here, the total cost have to be 12 Rand. So taking into account all the other costs, we first take into account all the other costs. We get a total before joint costs. So then we say, okay, what's available for joint costs? It is that. So now when you add up costs before joint costs and the joint costs, you will get to your total expected costs. Okay, so it can be less, but it can't be more. So that's basically the constant gross profit method. Hardly ever comes in. Okay, because it's a little bit, I think it's too difficult also to set up, okay, for the examiner to set it up. So, not difficult for them. They are professors, but it takes time. Okay, so the common methods that will come through is 1, 2, and 3. Physical measures method, market value at split off point, and the net realizable value method. You can only use the physical measures method when all joint costs are when all joint products are in the same measurement unit. You can use market value at split off point if you have a market value at split off point for both products. And you can use a you can use the net realizable value method when you have further processing costs. So now you have a selling price after further processing costs. You have the further processing costs. So you simply say selling price after further processing costs minus further processing costs gives you a theoretical market value or selling price at split off point. Okay, so in this scenario, the two methods that we will be able to use over here is one, physical measurement method. Okay, and this is because both SW and GJ are in the same measurement units. Okay, so basically tons or even liters, doesn't matter. The second one is net realizable value. Net realizable value method. Okay. Both are sold after further processing. Okay, therefore, the selling price after further processing less the further processing costs will give the NRV. Okay, then you can use that as split off point. What's important to take note, it mustn't be per unit. It needs to be okay, the allocation must be on total value and not unit value. Very important. So you must say 60 Rand times, or let's just see whatever. I'm just using the 65 Rand. Okay, we're not using the selling price. We must use the NRV, which is selling price after further processing minus further processing. I don't know what the further processing cost is, so I'm just saying 65 Rand. Okay, so it'll be 65 Rand times the 480 units, tons, and it's going to be this the 30 Rand times the how much tons was that now? Times the 96 tons. Okay, so remember, you must work on total level and then do the allocation. You can't split. You don't split like this. 65, 30. Okay, so let's just show you. So if I do it like this, it's going to be that divided by that. So allocation percentage over here is 68.32. Okay, remember 65 and 30 is not correct. This needs to be the net realizable value, which is selling price minus further processing. I'm just assuming this now, just to explain what I'm trying to get to. I'm just showing you what what's happening. Okay, so that multiplied by that multiplied by that. Okay. And you see, very different. Very, very different. If you use unit selling price, it's 68%, 32%. But if you use total sales value, then it is 92 and 8. So that's very important to take note. When you allocate, you must use total level and not unit level. Okay, so just be aware of that. So that is why I'm putting it over here. The allocation must be on a total value and not on a unit value point of view. Okay, so let's just see if there's anything else. Okay, we did that. Reference supporting figures where necessary. Okay, I don't know what for figures. It's fine. We'll leave that as is. Then they say, okay. Okay, so the recommendation, we will recommend that we recommend that joint costs are allocated based on physical units measurement. Okay, so it would be SW, GJ, it is 600, I mean, sorry, not like that. Yeah, so it's going to be 80%, 16%. Okay, so if we allocate, it is that multiplied by that. Okay. Product harvest percentage of harvest. Okay. Okay, and then we will basically say allocation cost percentage. It will simply, if we add this up, so we'll just say we'll do it on that. Okay, and that would basically be it. Okay, so remember we can't split on that 80 and 16 because we're not including that 4% of the byproduct. That's why we need to do a recalculation so that can come to 100%. Okay, so that is basically answering the question. So what did we go through? We said that we will what did we say? We will what I wanted to say now. So we said that as a joint product, because they're following they're going into one process with similar costs, and then at some point, which is the split-off point, which is at the inspection point, they are they grade the different grapes, and the different grades then become different products. Okay, so then we say the joint the cost within that process are joint costs, and that needs to be allocated. The way we're going to allocate it is we allocate it to the joint product, which is SW and GJ only. Okay, not to the other item. But before you allocate, you need to allocate, you must first reduce the joint cost by the net sales value of the byproduct. And then there are 4 methods to allocate joint products, joint costs. But there's only 2 that is applicable, and we recommend that we use the physical measurement units method. Okay, so that is basically what I can think of. Whether we get the full 11 marks, I don't know, or the full 13 marks, I don't know, but that is basically what comes to my mind. Do we have any question at this point in time? Sarina, anything on your side? Sarika, anything on your side? Tahira, anything on your side?
Nothing from my side.
Okay. Okay, so let's move on to the irrigation cost. So with regard to the irrigation cost estimation for SF Winery, so let's go look at that one. Remember, for your exam, which is 3rd year, you get the question paper and the required together. So read the required first and then read the scenario. In CTA, you get the required afterwards. So that is why you spend time reading the scenario first. Okay, so we're going to go to we know it's got to do with irrigation. Okay, so that is 2.1. Okay, not too long. Okay, so the irrigation cost estimation for SF Winery. SF Winery is exploring the most cost-effective option for its water supply requirements, considering recent unstable water supply. In this regard, two options, municipality-supplied water or borehole supplied water, are available regarding the expected monthly average water requirements of 11,500 kiloliters. Upon inquiry from Aurora Wines, a similar nearby winery, SF was able to obtain Aurora Wines municipal invoices as shown below. Okay, so the municipal supplied water. If the municipality supplied water option is considered, SF will use Aurora Wines municipal invoice as a base for estimating irrigation costs. However, the municipality is soon expected to apply a 6% annual inflationary increase on all of its charges. Included in the total municipal charges below are fixed refuge and sanitization charges of 3,750 per month. Marauder municipal invoices reflected the following. Okay, so what do you take note of this is that this is most likely the high-low method. Okay, so this is most likely the high-low method. You get a string of invoices, which is a mixed cost. So this here is a mixed cost. Okay, and then there is a then we have different quantities. So that's most likely you have to apply the high-low method. Remember CTA third year because of Psyche. Psyche loves the high-low method. So the chance of you getting the high-low method is very high. Okay, so make sure you can use the high-low method. So take note of this over here. We trying to get the water supply, right? We want water supply. Now this is a total charge. So if you look at the water paper, right, you'll generally see like rates, refuge, sanitization, sometimes electricity and water. Okay, but in this case, the total charge is water, refuge and sanitization, right? So we want to get the total water charge. So to get the total water charge, we take these amounts and reduce it by 3,750. So that will give us the total water charge. I mean, yeah, so then we'll give it, so when we reduce this amount by the 3,750, that will give us a total water charge. Now, the total water charge is a mixed cost. So then we will be able to work out the fixed and variable component. Okay, so just take note of that. Okay, the borehole supplied water. If the borehole supplied water option is considered, SF will use one of the boreholes currently used for its residential needs. This borehole was drilled 4 years ago at a cost of 380. So remember, there's a cost of 380 or 38,000. That cost of 38,000 was incurred 4 years ago. So that is considered to be a sunk cost. Remember, in costing, whenever there is a cost and you're not using it, you must tell them why you are not using it. I remember one of the questions I did when I was a student. I can't remember if it was an exam or I can't remember if it was a test or whether it was just a tutorial I was working through. I can't remember, but I do remember marking myself. So I know I went through the marks, right? So I kind of think it was a test. When I looked through my solution, I basically got everything the solution had, but I still failed. I still failed that question. And the reason why I failed the question was because I only included the numbers I used. And I had every number. I included every number that the solution included, but I still failed. And the reason why I failed was, despite me having every number that the solution had, I did not include the numbers that was in the scenario and providing a reason why I did not include it. So by mere fact of not including not telling them why I have not included numbers, I lost basically half of the marks. So that is why it's important when it comes to costing. If you don't use a number, you tell them why you are not using the number. So for example, we won't use this number because this 38,000 Rand have already been incurred. So that is a sunk cost. So we will tell them, borehole drill 4 years ago, 0 sunk costs. Okay, so remember those type of things. With this option, the borehole will be used to supply 40% of the irrigation water requirements for the grapes at a pumping cost of 260 Rand per kiloliter. So remember, they need 11,500. So 40% of that is 11,500 times 40% times 2 Rand 60. Okay, SF Winery will be required to drill a second borehole from which the other 60% of the irrigation water requirements for the grapes will be pumped. The current drilling cost for a similar borehole is 45,000 Rand. However, as a repeat client, SF is entitled to a 5% drilling cost discount. This borehole will be used exclusively by SF Winery. New advanced drilling and pumping technology will make it possible to reduce the pumping costs for this borehole only to 180 Rand per kiloliter. Okay, so there will be 45,000 Rand times 95% because we get a 5% discount. Then it will be 11,500 times 60% times 1 Rand 80. Okay. SF Winery will depreciate the borehole at 5 Rand per annum on a straight line basis. Okay, so this is depreciation. We're busy with management accounting. Okay, so 90 to 95% of management accounting and finance excludes only focus on cash flow. Okay, there is instances where we take in non-cash flow items, but we'll read again, and I'm most likely certain we won't take this in because it's a non-cash flow line item. Once again, we will say depreciation of boreholes, 0, non-cash flow. Don't just leave it out. Oh! Don't just leave it out. The expected annual service cost will be 5,000 Rand for the existing borehole, 70% resulting from domestic usage and 30% from business usage. Okay, so that is a bit of a, we'll have to think about that. Okay, we'll have to think about that. For the new borehole, the service cost will be 3,000 Rand. The service costs are mainly driven by the level of usage of boreholes. Okay. To set up the irrigation system, to cover the entire farm, the associated costs are expected to be 87,000 Rand, once off, payable upfront, regardless of the option chosen. Okay, so we'll exclude this. Why? So even though it is a physical cash flow, but it is not relevant. Why is it not relevant? Because whether we use the borehole option or the municipal option, we're still going to incur. It's going to incur in both options. So that makes it a non-relevant cost or an irrelevant cost. Okay, so just take note of that. Okay, so now we can go work this out. I just want to go read the required again. So the required says determine the expected annual irrigation costs. Okay, so that's very important. So so something you want to keep in mind when it comes to costing. Okay, so I always tell students the following: identify whether you are working with actual or budgeted information. Okay, in this scenario, it's not so relevant because they are splitting it in its various components, okay, in its various headings. But it's very important to still take note whether you are busy with budgeted information or actual information. That will help you to know where to look within the scenario. Okay, that's one. Secondly, you need to identify whether information is provided to you annually, monthly, or quarterly. Okay, very important to take note of that. Whether it's an annual amount, a monthly amount, or a quarterly amount. Okay, so is the information provided annually, but you are required to do monthly? Is the information provided monthly, but you're required to do annually? So take note of that. Okay, like just yesterday, I was doing a one-on-one session with a CTA student, and we went through a question on costing. And when we go check our marks, then we were like, we got everything, but we're not getting the answer right. So I told her, okay, because I needed to go on to the fact lesson. So I said, okay, as your lesson, go and see where we went wrong. And then basically one of my own principles I never applied, and that was that we worked out, we had everything right, but we still came to the wrong conclusion because we were working on annual numbers, but they told us to work on a monthly basis. So on an annual basis, we were okay, but on a monthly basis, we were not okay. So as one of my own principles, I did not apply, and that's why I'm stressing it again out over here that when you're dealing with stuff like this, determining numbers, have a look whether you're dealing with budgeted, actual. One of the other additional parts is with knowing whether you're doing with budgeted or actual, they'll generally give you a heading to say budgeted information, actual information, so you would know which heading to look under. The second is to identify whether it's annual, quarterly, monthly, whatever it is, weekly, daily, whatever it is. So here they want us to give us annual irrigation. But remember, most of the cost provided above was based on monthly. Okay, take note of that. The third thing you want to be aware of is whether you are busy on a per unit level or on a total level. Okay, at least that we got right. We were given information on a total level, but we knew we needed to work on a unit level. But why we still got the answer wrong was because we worked on annual numbers and they asked us for monthly numbers. So once again over here, take note of those three things: budgeted versus actual, the duration, annual, monthly, quarterly, weekly, daily, whatever you want to call it. And then third, whether you must work on a total level or on a unit level. Sometimes it's much easier to work on a total level, but ultimately your final answer must be what they want. So then you work on a unit level. So sometimes the way you work out your answer will either be unit level or total level based on how the information is provided. But just make sure that your final answer is what they ask you to provide it in, whether it is total or whether it is unit level. Okay, so when you're working on numbers, always look out for those type of things. And then obviously don't forget the unit level, like kilograms, tons, liters, and so forth. Okay, so here they want us expected annual irrigation costs of each of the two given options and recommend the most financially viable option of the two. Okay, so remember, they want the most financially viable. So if you're working at from an income perspective, then you look for the highest amount. If you looking at from a cost perspective, then you will choose the lowest amount. Okay, so because this is a cost, we will look for the one that cost us the least. If it was like making money, then we look for the one that will earn us the most. Okay, so just take note of that. Okay, and then number 4, assume that SF Winery chooses the municipality supplied water option. Discuss 4 factors that could affect the accuracy at which SF Winery can estimate the expected irrigation costs. Okay, so we can have a look at that. Here they ask us, they didn't do this for nothing. They said financially viable, because remember, when it comes to relevant costing questions, there are 2 aspects to consider: the quantitative analysis, which is the numbers, and the qualitative aspects, which is just thinking about risks and all of those type of stuff without a numbers perspective. So sometimes something can be financially viable, but if you take qualitative characteristics into account, it might not be the best approach. Okay, so just think about that. So for example, you can buy things from, for example, China, okay, but so it can be extremely cheaper, but you perhaps know that China's known for maybe the cheaper, not high quality. Not 100% true, because obviously Apple make great products, and basically almost the whole of Apple's phone is made in China, right? But in many other cases, the other issues to consider, for example, whether it's true or not, but in China, apparently, or even like Middle East Asia, it's got to do with the issue of So maybe from a financial point of view, it is viable because it's nice and cheap. But if you look at qualitative aspects, it may be that they use child labor and all of those type of aspects. So do you want to be associated? So that is basically when you think from a qualitative perspective. Okay, so just be aware of that. Okay, so let's go and do this. And they say your analysis should be based on the first year of operation only. So let's go and do this. So you should see Excel in front of you. Okay, so so we're gonna have municipal, and we will have borehole. Okay. Okay. So basically, we're gonna have cost item, amount, comment. Okay. So that is basically what we'll follow that up. Okay, I'm just gonna say total cost. Okay. It's easy for me to do that. I can just insert those. So if you're right, you're obviously gonna have to first put in all the line items. Okay. Okay. So you are seeing Excel. I'm switching now back into the scenario. I need to go get the numbers. So let's do the bore. Okay, we'll just go through the scenario. Okay. So the municipality supplied water. We need to work out what is going to cost us. So we have to work out a high-low method. Okay. So let's go and work out the high-low method. I'm going to see if I'm able to copy and paste this quickly. So just make sure you are able to see me switch between Excel and the scenario. You should be able to. So I'm cutting on Excel, but now I'm switching back to the scenario. Nope, not working. Okay, so let me just delete this. So we have September, October, November, December. So September, October, November, December, and we have 12/5, 11 to 80, 12/5, 11 to 80, 11 to 80, 11/3 and 12/350, 11/3, 12/350, 11/3, 12/350. Okay, then we have 65, 59, 510, 65, 59, 510. And just double check that I'm taking the right stuff. 57, 905, 57, 905, 57, 905, and then 65, 560, 65, 560, 65, 560. Okay, so total cost, water consumption, okay, and month. Okay, so remember we want total water costs, okay, non-water, I'm just calling it non-water costs. So this was 3750. Okay, I'm with you now. Okay, so the unit is 3750. So now we can work that out, which is that minus 3750. So we're going to base the high-low method on this line over here, this column, and then the kiloliters. Remember, what's important when you work on the high-low method, you don't look at the cost line item, you look at the unit line item, okay, the driver. So you look at that. So therefore, the highest here is that. The highest over here, 12,500. Okay, so it's going to be that one over there. And the lowest is 11,280. Okay, take note. That cost is the highest, so you don't choose that. Okay, so remember, you must choose based on the units, okay, the driver, not the cost. So when you choose a high-low, that's the highest consumption, lowest consumption. That's what the high-low method is based on, not on this. If I had to use this line item, the highest would have been that, and the lowest would have been that. Okay, so please take note of that. You don't get this completely wrong. So the rule is, or the principle is, when you choose high-low method, it is based on the consumption, not the cost. Okay, so we always look at whatever the unit level is and not the cost level. Okay, so now we work out the high-low method. So the high-low method is going to be as follows. How do we do this now? Okay. Okay, so high, low, cost, consumption. Remember, there's not always a case where you have to subtract something. It just happens to be in this scenario. Okay, so just be aware of that. So what most people that have, some people don't know what to do with this. What some people that have thought that this is the fixed portion. This is a fixed portion, but it's not the fixed portion relating to the water. Okay, so remember, we're trying to work out the fixed and variable portion for the water only. This is non-water, so just take note of that. Okay, so the high cost is going to be that. The low cost is going to be that. Okay. I don't want to stress it again, but basically take note that when you look at high-low method, you identify high-low based on the activity level, not based on the cost level. Okay. So the activity, high is that, low is that. Okay, so now we work out the difference. Okay, so the unit level would simply be that divided by that. Okay, so the cost per unit is 4.50. Okay, so that's 4.50. Now, the fixed portion equals total costs less variable costs. Okay, so you can choose any one you want to do. I just choose one of these. Okay, so I just usually take the high one. That's like the first one I see. So the total cost is equal to 61,250. the variable costs, and then that will give me my fixed portion. Okay, fixed costs. So the total cost is going to be 450 multiplied by the units, 12,500. So because my cost is, I use the high cost, so I'll use the high consumption. It's simply going to be 12,500 times 450. So that's my variable component. So therefore, my fixed cost is going to be that minus that. Okay, so fixed cost is 5,000 Rand. So over here, fixed water costs, okay, fixed water cost, and then variable water cost. Okay, so we can work it out. So working 2. Okay, so remember we need 11,500. So if I go back to the scenario, they told us somewhere here that we need 11,500 per month. Okay, so monthly average 11,500. Okay, so basically the variable cost and then the fixed cost. Okay, so monthly amount, it's going to be 4.5. That's going to be 5,000. Okay, units, I mean inflation. %. 6%. Okay, so this is going to equal that multiplied by 1 plus the increase rate. Okay, so monthly usage. So remember 11,500. This one is a fixed cost, so there's no monthly usage. I'm just going to put a 1 just to keep the formula consistent. You don't have to put the 1. So you can just bring that number down. Okay, so total monthly costs. So it is 477 per unit times 11,500 units. Okay, so as a fixed cost, 5,300 per month. There's no, so we're just multiplying it by 1 to keep it the same. Okay, because there's no usage. Okay, it's not based on usage. Okay, and then we're going to say number of months. 12. So annual cost. Okay, so annual cost would be that. So now we can just say okay, so there we go. So that's going to equal that. And that's going to equal that. Okay, and then we're going to just make it clear over here, working 1. So they can see where that's coming from. And then we're just going to say given. Okay, the rest they can figure out for themselves. Okay, so the rest should be make sense. Okay, so there we go. Okay, so so that is the total cost over here. Let me just have a look. Is there anything else I missed? Municipal. We went straight into the inflationary increase. Okay, we went straight into borehole. Okay, so that is done for. That is done. Okay, so that's done. Okay, so there we go. So that is done. Total cost of municipal is that. Okay, now we're going to do the one for borehole. So we're on the annual cost only. Okay, so now let's do the borehole aspect. So for the borehole, so remember there's going to be two boreholes, right? The 1 and the 2. Okay, so let's have a look. So if the borehole supplied option is considered, SF will use one of the boreholes currently. This borehole was still 4 years ago at a cost of 38,000 Rand. Okay. Drilling costs, borehole 1, 0, sunk costs. Okay, let's just do 0. Okay, sunk costs. Okay, so we're happy with that. That's the comment. Okay, then we're going line by line basically. SF will use, okay, with this option, this borehole will be used to supply 40% of the irrigation water requirements for the grapes at the pumping cost of 2 Rand 60. Okay, so 40%. Okay, so borehole 1 water cost. So it is 11,500 multiplied by 12 multiplied by 40% multiplied by 2 Rand 60. Okay, so borehole 1 can only cover 40% of the irrigation supply. So the irrigation supply is 11,500 Rand per month. We need to work out an annual cost. So 11,500 kiloliters per month times 12. But the borehole 1 can only cover 40% of that. So we multiply by 40%, and then the cost per liter is 2 Rand 60. Okay, so we're going to have 11,500 times 12 times 40% times 2 Rand 60. Okay. Next, is a winery will be required to drill a second borehole from which the other 60% of the irrigation water requirements for the grapes will be pumped. The current drilling cost for a similar borehole is 45,000 Rand. Okay, so we know, let's do that one. Drilling cost, okay, borehole 2, it is 45,000 Rand, but they get a discount of 5%, so 95%. Okay, so it's going to equal 45,123 times 95%. Okay, so we have that. So the borehole, okay, the new advanced drilling and pumping technology will be made. Okay, so it will be 180 per kiloliter. Okay, so exact same formula over here. So exact same formula over here. I'm going to copy that over. Okay, so this is borehole 2. So it's still 11,500 times 12, but it's now 60%, and it is now 180. Okay, so I'm going to just change it here as well. 60%. 60%, 180. Okay, so we're happy with that. Then what do we need? 180. It's a winery will depreciate the boreholes at 5%. Okay. Okay, so depreciation of boreholes, this is 0. Why? Non-cash flow. Okay, so non-cash flow. Okay, so we did that. Okay, so the expected annual service cost will be 5,000 Rand. 70% resulting from domestic usage, 30% from business usage. So I'm assuming we must use only 30%. For the new borehole, the service cost will be 3,000 Rand. This is mainly driven by the level of usage of boreholes. Okay. Okay, so I'm going to say service costs existing. Okay, service costs new, whatever it was called. Okay, so this is going to be 3,000. Okay, and that is given. I'm assuming they want us to say 5,000 times 30%, but only that is business, the others is non-business. So therefore we say 5,000 times 30%. Okay. And it was I think it was annual that I read over there. Was that annual? Yes, so that's annual. So to make sure 45 once-off costs, 260 per kiloliter, 180 per kiloliter. Okay, so that's fine. You set up the irrigation system to cover the entire farm. The associated costs are expected to be, okay, so that's it. So if I work this out, okay, so it's 339. Okay, so the borehole is cheaper. Okay, so let's just say that. So we'll say the borehole option is the financially viable option. Okay, so there you're going to put that there. And then just before we do the conclusion, we must do one more thing. We might just say the setup cost of 87,000 Rand was not included in the analysis as it impacts both options. Okay, therefore not a relevant cost. Okay, so that is basically what we're going to say over there. So remember, why do we not include it? Because it's going to impact over there and it's going to impact over there. So it's not a relevant item, so therefore we don't include it in the analysis. I mean, you can. Sometimes they'll be lenient and not deduct a mark. Sometimes they are very strict and they deduct a mark if you put in an item that impacts both. Okay, but basically that is going to be our conclusion. Do you have any questions at that point? Any questions at that point? Yes, no? Sarika, Serena, Tahira, any questions? Okay. So what we're going to do, this meeting's going to end now. So we will come back on the new meeting link. We can come back to like about 5 past, 10 past. Then we're going to finish off these two questions and move on to question 2. Okay, so for question 2, I'll do the big marks. Not going to worry about this. I'll definitely do this one, and we will go through this one over here. Okay, so when we come back, we will do we'll take like a 10-15 minute break, and then we'll finish up these two questions, and then we can go on to the finance part. Just to end off over here, so they say assume winery chooses municipality auto option. Discuss 4 factors that could affect the accuracy of the estimate. Okay, so remember for they based the amount on another farm's municipal amounts. So the one thing they had to look at is the size of the farm. Okay, but I mean perhaps okay, so you want to have a look at the size of the farm, although the kiloliters are quite high relative to what we want to look at. But it's got to do with the fixed costs per charge. So remember what the municipal does is they have like a sliding scale. So that is one aspect to have a look at. Also to have whether the inflation is going to remain the same, and if the other farmer basically have like sometimes they maybe have reduced rates. Okay, so it's those type of stuff to have a look at. But I mean, you can kind of just think of anything from your mind and that makes sense in terms of accuracy and actually plug it in. Okay. So there's like 4 marks. You write 1 or 2 things to get 1 or 2 marks. That's fine. So I'm going to stop this lesson over here, come back to part C and part D. We'll do the 10 marker and the 8 marker. I'm not going to still do the 2 marker. And then over here, I won't do question A, but I'll do part B, and we'll do the numbers questions over here. And we may look at these ones as well, but we'll do most of the number related questions over here. Okay. So I'm going to stop here. We can come back 10 past, quarter past, and you go on the second link I sent last night. It should say MAC3761 class 1 of 2. That is in effect class 2 of 2. Okay. So I'm going to stop here. If there's no questions, we're good to go. If there's any question, you can ask now. No questions? Okay, so I'll stop it. Okay, thanks. Bye-bye.